Welcome to our channel on accounting lessons with worked out problems. Brought to you by an experienced accounting professor with a CPA. We have videos on all topics of introductory financial accounting. Our focus is on step-by-step illustration of a problem, worked out on a whiteboard. Each topic also reviews concepts at the end if you need to brush up. Please do not forget to subscribe. This lesson is presented in two videos. 1. Accounting of uncollectible receivables, and 2. Accounting of short-term receivables. This first video illustrates accounting of uncollectible resources by allowance method and direct method. Please review a description of the problem on accounting by allowance method that we are going to illustrate first. It will be helpful to have a printout of the problem for reference while the problem is being worked out on the whiteboard.
So first we are going to go over the allowance method and then we will do the direct method. First, and this problem is in the PDF file and I'm going to read out the problem, and for every information I'm going to do the journal entries or maybe the T accounts. So first, the information given is a company had $35,000 balance in the accounts receivable and $40,000 cash in the cash account as of January 1st of 2023. So here, this we are going to do first the allowance method. So the first information here is the company has the accounts receivable balance of $35,000 and it has a cash balance of $40,000, and then the credit balance in the allowance on the beginning of the year was $5,000. So here you have allowance, and as you know, the allowance for uncollectible account is a contra asset, therefore it can have only a credit side balance of $5,000. So these are all the information coming from information 1 and 2. And information 3, during 2023, $200,000 of goods were sold on account. So here you will debit accounts receivable $200,000 and you will credit sales revenue $200,000. And now number 4, a customer defaulted. Okay, this is from information 1, and this is from information 2, and this is number 3. Number 4, a customer defaulted on his account of $4,000 and the company determined this amount will not be collected. So here the company is sure this $4,000 is not going to be collected. So what do? They will debit allowance for $4,000 and they will credit accounts receivable for $4,000. Now at the end of the year, the company estimated that 4% of the credit sales will go uncollected. So here, remember, under the allowance method, the uncollectible accounts expense or the bad debt expense is estimated and recorded at the end of the year. Here the estimation is based on the credit sales. And here they estimate 4% of the credit sales will go uncollected. So the credit sales is $200,000. So 4% of $200,000 is $8,000. So here number 5, they will debit uncollectible accounts expense $8,000 and they will credit allowance for $8,000. And now, so this is for all the requirement number 1, which is to prepare the journal entries for these transactions. Required number 2, it says how will the accounts receivable presented in the balance sheet. Remember, the balance sheet we will present the accounts receivable and the allowance. Now number 6, it says the accounts receivable balance on December of 2023 was $65,000. So here they have $65,000. So here they must have collected some accounts receivable. How much would they have collected? So if you calculate 35,000 starting, 200,000 they sold on account, 4,000 was deemed uncollectible. So if the ending balance is 65,000, then they should have collected $166,000. So you credit accounts receivable $166,000, debit cash $166,000. Now the balance in the accounts receivable is $65,000, and how are we going to present in the balance sheet? So in the balance sheet, okay, under the assets, first you will put the account receivable 65,000, and from this less the allowance balance. Okay, now go. Your allowance balance is, how much is it? 9,000. So you bring the 9,000 over here. 9,000, that equals your net accounts receivable, $56,000. 65,000 minus 9,000, 56,000. So this is what the allowance method is. Now, in the direct method, the company will not maintain the allowance account. Okay? So here, in the direct method, we are going to the illustration for the direct method. So here, this is the example, the illustration. It's in the PDF file for the allowance method. Now we are going to the illustration for the direct method. In the direct method, the company does not maintain the allowance account, and there is no estimation of the uncollectible accounts expense at the end of the accounting period. The uncollectible accounts expense will be recorded when the customer actually defaults. So here the illustration for the direct method of uncollectible accounts. So here it says the beginning balance of the accounts receivable is $200,000. So here you have accounts receivable $200,000. So if you look at the problem, there's no information given about the allowance because this is a direct method. Now the company made the credit sales of $440,000. So you debit accounts receivable $440,000 and you credit sales revenue for $440,000. Next one, the customer defaulted on $50,000 receivables. So this is actually customers are not paying the $50,000. So here you will debit uncollectible accounts expense for $50,000 and you will directly credit your accounts receivable $50,000. And finally the company collected $460,000 from the receivables. So you credit accounts receivables $460,000 and you will debit cash $460,000. So this is information 1, this is information 2, This is information 3, and this is information 4. Now the second requirement, how will the accounts receivable be presented in the balance sheet? So in the balance sheet, the balance in the accounts receivable will be reported at the gross amount, which is equal to $130,000. So in the balance sheet, under assets, you just put the accounts receivable 130,000. That's it. There's no allowance account here.
Before we close the first video on uncollectible receivables, let us review the concepts behind the problems we illustrated.
Now, accounting for uncollectible receivables. Now, what are uncollectible receivables? These are the receivables that were not collected by the company and the receivables that are estimated or expected not to be collected. Now, there are two methods in accounting for uncollectible receivables. The first method is the allowance method, and the second method is the direct method. Now, what is an allowance method, and when does the company uses the allowance method? This method is used by all the corporations. And if a company knows that some receivables may go uncollected, and if the company can reasonably estimate these future uncollectible receivables, then the allowance method is used. The direct method. If the conditions stated for the allowance method are not present, then the company can use the direct method. Most time, the companies will be using the allowance method. Now, what are the steps involved in using the allowance method for accounting the uncollectible receivables? First, you should know the company maintains an account called Allowance for Uncollectible Account. At the end of the period, the company will estimate the amount of the receivables that may go uncollected. So usually for corporations, the end of the period is the end of the quarter. That's at the end of every 3 months. The company will estimate the amount of the receivables that may not be collected. And this estimated amount is recorded as an expense and also as a decrease in the value of the accounts receivable. Note the word, guys. It's a decrease in the value of the accounts receivable. So in this method, we will not have a direct decrease in the accounts receivable, but we will only decrease the value. Now, bad debt expense will be debited, and allowance for uncollectible account will be credited for the estimated amount. This allowance account is a contra asset account. As you know, any contra asset account will show a decrease in the value of the asset. So now this contra asset account can have a balance only on the credit side. Now, when customers fail to pay or default on the payments, the actual uncollectible amount will come out from the allowance account, and now it will come out directly from the accounts receivable account. And all these steps we will be illustrating in the example. Now, when the actually customer defaults on the payment, at this point, the allowance account will be debited and the accounts receivable account will be credited. Now, the direct method. Here, the accounts receivable is directly written off. That means directly the accounts receivable balance will be decreased, and an expense account, that is the bad debt expense, will be recorded when the receivable is determined to be uncollectible. So here, the bad debt expense is debited and the accounts receivable is credited for the amount that went uncollected. Note, in this method, the bad debt expense is the actual amount that was uncollectible. And in this method, there is no allowance account maintained. Now here, we are going to see how a previously defaulted amount are collected. That is, we are accounting for the collection of the cash from a previously written off accounts receivable. Now first, that is, what we mean is previously an accounts receivable has been determined uncollected, so we did the necessary journal entries under the allowance method and also under the direct method, whichever the method the company used. Now, if the previously written off receivable is collected in cash, first, what do we do under the allowance method? First, the amount that is collected now will be debited to the accounts receivable and credited to the allowance account. And when the cash is actually received, we will debit the cash and credit the accounts receivable. Now, under the direct method, first, the amount will be debited to the accounts receivable and credited to the bad debt expense. When the cash is actually collected, we will debit the cash and credit the accounts receivable.
Thank you for watching the video. We hope we were able to help you understand the accounting of uncollectible receivables by two different methods, namely, the allowance method and the direct method. We have video lessons with worked out problems on all topics of financial accounting. Please do not forget to subscribe. We hope to see you in another video lesson.